Well, hello, active traders, and welcome to ADX and Bollinger Band Breakouts. I'm Ken Calhoun, your host, president of the original TradeMastery.com and Day Trading University. It's a real pleasure to be here with the folks from Investor Inspiration. And thanks so much, Renee and team over at MTI, for inviting me. It's great to have you all here. And for all of my traders, good to have you here today. We got some really good charts to work with. I'm going to be going over live market charts today using current examples of some really spectacular breakout charts that have really good upside potential. And it's very rare for me to teach on Bollinger Bands. I published an article in Stocks and Commodities on the topic, but this is one of the only times I've ever presented on using both ADX and Bollinger Band breakouts, the first world premiere. So pleased to be here with everybody. I'll be here for the next 45 minutes. Great to see all of you here. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. If I only had $1 for every time I had to say this, I'd have quite a few $1,000 extra. Anyway, by watching this, you're agreeing not to make actual trades. We make no profitability or performance claims. You may have seen me on CBS Market Watch, the Street.com, Money Show, Stocks and Commodities Magazine, etc. One thing, let me ask, how many of you would agree with the statement that it kind of makes sense to learn from people that prove they really trade? I mean, just call me silly, but I think it's important to learn from people that actually have P&L, like my Interactive Brokers screen cap proof that I actually have made winning real money trades. I think that is an important thing to look for when it comes to figuring out, you know, who's a good person to learn from. Or at least it's icing on the cake to know that the person's not just a chart talker, but they're actually a real trader. So that's one of the reasons so many thousands of people have worked with me over the years. You may have seen me in every month's issue of Stocks and Commodities in my Trading on Momentum column. Back in the day in 2001, I'm one of the original .com day traders, and I used to run Day Trading University. I since changed that to Trade Mastery since I have so many swing traders as well. So you may have seen me at the Traders Expos, etc. Let's get on with that. Okay. Anyway, I've been all over the place, and it's great to see so many of you here today. It's really neat to see a big turnout here, an epic turnout on a, Wednesday early afternoon. So if you've ever had an expression or felt like this, if your trading losses make you or your family say, "Dolt," you're in the right place. If you ever have a problem in terms of you hide your trading losses from your spouse, you might have a problem. Whenever I do my money show talks, I always we had a standing room only crowd back in Vegas a few weeks back at the Traders Expo, and I always get a lot of nervous chuckles and people raising their hands sheepishly when I say, how many of you conceal your trading losses from your spouse, your family member? That's probably not a good sign. So trade wide, not deep. Don't go large on any one trade, whether you're doing lots, contracts, or shares. Trade wide, not deep. Today we're going to look at these tactics, and kind of like this is it for the PowerPoints, so don't worry. I'm a real trader, so I like to work off live market charts. This is the end of the PowerPoints until the tail end of the presentation. We're going to look at ADX over 40, how to avoid false breakouts, how to use Bollinger Band breakouts, stops, targets, and exit signals, and next steps in terms of taking action. So feel free to ask questions. Oh, hey, Kamal, good to see you, man. Good to see big turnout. Hey, Naresh. Hey, Rich. Hey, Trevor. And yes, they are recording this, so hopefully you will be able to see this later. Let us go ahead and get underway. One of the first patterns that I want to teach you about, actually the very first pattern is, let's start off with average directional index because it's one of my favorites. Then we'll move into Bollinger Bands. Just to be in alphabetical order, alpha before beta. J. Wells Wilder's average directional index is a volatility indicator. And when I set this up on my standard charts, what you're looking at is a 15-day, 60-minute candlestick chart of DHI, and the tickers are over here, so it's easy to see as we click through these. What I like to use is a standard 14-step parameter. So I do that, and I intentionally decolor or kind of digitally white out the plus and minus directional index lines because I don't use those. I just use the red ADX. The higher the ADX goes, the more volatility you've got in an instrument. The play is as follows. I've traded this pattern for years, and it's one of the more popular ones that I've taught and published on in Stocks and Commodities and Active Trader and the rest of it. Look for an ADX to break over 40. Okay, and whenever the ADX breaks over 40, odds are you're not going to see it the day that it hits over 40. If you're like me, I trade so many different instruments. I may be in as many as anywhere from 26 to 30 instruments simultaneously. So odds are I'm going to miss it the day of the signal. What you do is simply add 50 cents or so to the high of the day in which the ADX breaks from below over 40 and continues up. And that would put you in, this guy would be what, 50.10 or so. So that would have triggered a couple of days back here, and that gets you in on a good breakout. So the play is look for an average directional index. What is it? It goes up when something moves sharply. It's good if you're a directional options trader too, if you're doing, whether doing calls or puts or debit or credit spreads or iron condors or butterflies or whatever you're doing as a weekly options trader or monthly options trader. The ADX is perfect for that, as well as trading the underlying like I like to do as well. So whether you trade options or the underlying instrument, look for an ADX as a kind of like the volume control or the heat gauge on a thermometer, or heat gauge on a stove, I should say. When the ADX comes from under 40 and breaks over 40, that tells you got a hot stock. And for example, this was a gap, minor gap continuation, which is my favorite pattern. Always look for minor gaps of less than 10% of the price to continue up. That's kind of the poker tell number one, that you got a good breakout in progress. The second signal is ADX coming from below, kind of like Jaws. And I always sing, you know, dun, 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 dun. You got an in the money shot at it, boom, flawless victory. When you get a 50-cent breakout above the ADX over 40. And again, we can just kind of randomly click through some hot charts and see how well that would have worked out. And you'll see that that's a thing that many of the breakout charts have in common, is an ADX over 40 signal. I mean, just look at any hot chart. I mean, any hot chart, look for things that they have in common. You know, like I said, I've traded as much as 4.9 million in order flow in a single year. And I do that so that I can test out different patterns and find out what the heck works, right? So a lot of new folks logging in here as we speak. I know we started just a minute early, but the reason I make a kind of a deal of that is because anybody can talk about charts, but who can prove with the brokerage account? Again, I only made 16 grand, 17 grand in profits, but I did 4.9 million worth of trades in a single year, so I could test out, and this is back in 09, I can test out hundreds of different patterns in the course of doing several thousand trades and figure out what works and what doesn't. So I actually trade. So that's one thing that I like to bring to the party, is proof that I can actually trade profitably, and also how to use some of these patterns. So here's ADX. Now it's kind of kissing, touching, but not breaking over the 40. And you could have still called this a signal day, but that's the day in which it really lifted over 40 right here. So that is what I call an ADX signal day. Odds are you and I would have missed it because it went up without us. That's okay. We're just getting the party started. ADX is broke over 40, and now price is breaking out to new highs. Another momentum candlestick pattern I've taught for years is to look for large green candles at the right side of a congestion box or a bullish cup. I've been teaching traders that since back in the 90s. And that's a good institutional signal that you've got some buyers in the house. And this is PHM. Does everyone see clearly how easy that pattern is? ADX comes from below 40, it breaks over 40, just add 50 cents or so to the high of the day in which it breaks over 40. That's your entry trigger, which would have been what, 33.70, and you're off to the races. Most hot charts have that pattern. Here's ADX over 40. How did that work? Well, here is, and by the way, that's why I use a 50-cent price action filter. How many of you have ever gotten in a false breakout that hasn't worked out? I hate when that happens. Stop the madness. There's got to be a better way. Okay, so we all hate it. How many of you have been, even worse, how many of you have been directionally correct ultimately, but trading-wise, you still suck and you lose money? Because directionally you bought a breakout, you got stopped out, and then to rub salt in the wound, it runs up without you, point after point, and frustrates you. And you know, I've learned, I used to be that guy back in the 90s, and I learned how to turn it around, and the way that you do that is to use a filter. Don't buy the public money, the dumb money breakout right above a high. What you want to do, what you and I want to do, is instead use a 50-cent or so. Again, you can't spreadsheet trade. You can't just blindly add numbers, but have some false breakout filter above a high. So does everyone see the validity of the approach? Here's an ADX over 40. Everybody see that? Do we all agree that ADX, are you with me on this or not? Do you see ADX broke over 40 on this day? Had you been following it? If you could get in a TARDIS and go back in time, for the fellow Doctor Who fans, also known as Whovians, kind of like Trekkies, but for the BBC fans in the house, anyway, which is a great TV series with Peter Capaldi. Now, anyway, that should have told you it's a hot chart. But yeah, you have to wait. There's more. What you don't do as a trader, and this is for any breakout pattern. I'm one of the world's top experts in breakout trading, and it's because I learned the hard way to avoid false breakouts by not buying at the public dumb money place, which we're all taught in the Charting 101 books, right? You do not buy the first sign of a breakout for FOMO or fear of missing out. Instead, you're skeptical and you say, wait, kind of like meeting a woman at a nightclub. There's probably some skeletons in the closet, speaking from experience, and bad things that they're not going to tell you about. So you want to stay away until you can check it out and make sure it's honest. Well, anyway, we've got tweezer tops here, right? A bearish series of upper shadows, which by itself is a bearish signal. But if you were to have added 50 cents to this, and again, I'm just for the first time looking at ADX, all these charts, I'm a real trader. I didn't cherry pick this stuff on a PowerPoint slide. If you had added 50 cents, if you'd followed my tip, added 50 cents to say 35.60, that would put you in at 36.10, and that's in the money. At least right now, we got a shooting star up there, so I'd be nervous long, but it's starting to work out. So you add 50 cents to the signal day, and that generates your entry trigger. So you have to be patient, and you avoid all these little false breakouts along the way. Another quick tip is to avoid nines. And I published a video for Money Show sharing this last week, where I told everybody we sell the 49 if that hits, because nines look expensive. And again, you may have seen my stocks and commodities article on the topic too. Just a quick topic to add, a bonus topic. Thou shalt not buy anything with a 9 for the rest of your life as a trader. I've done millions of dollars worth of trades. I know how to trade. Do not buy anything with a 9 because it looks expensive to the crowd. Now this looked all rosy on its way up, right? This is Square, SQ, one of the hottest charts in recent history. It looked all great up until that fateful day in which a 9 was triggered, in which case it promptly said, oops, we're going to go right back down and sell off. So whenever you're buying, the strategy is the trader price action strategy I use in my own trades is to buy above a decade value, like 41, 42. I'll sell into 48, 49. I can always rebuy a new high over, say, 51 or so, 50 and a half at the earliest, but we don't want to trade that yet. If you look at a chart, for example, like DHI, 49 would have been fine. Do not let the fact that it kept running on up keep you in the trade long. I would have been fine. I'm currently long DHI, by the way, just a disclosure. I'm currently long this guy still, but I was happy that it hit the 9 and I tightened in a trailing stop right under support. Unlike Square, this one didn't hit and it kept running, so that's good. But does everyone see the validity of that approach? Oftentimes you'll see decade values provide price action resistance. Sometimes they'll blaze on through it if it's an especially strong chart. Other times not so much, like the Square pivot. Or one that I'd call for my traders was Weight Watchers, and I told everyone to sell the 39 after getting them in the 20s. If you look in the, let's take a look at the 1 year in Weight Watchers. Does everybody see what a spectacular chart this was up off its base? You have a bullish cup breakout, large green candle, high volume confirmation. This guy ran from 20 to 40. We've got a doubler in the house. Boom, flawless victory. But that's great, but how do you get out with your profit intact? We had a bearish engulfment where I'm pointing, and the 39 was where I told the world's traders to sell, sell, sell. And that was a good idea because they locked in a big gain on the way up before the drop. No, ultimately came back to life, which is all well and fine. You can always rebuy a new high, but get out at 9s. Get out at 9s. You have my word. If my life depended on me helping you folks become successful, that's one of the rules that I would insist upon as a professional trading community, is that you use price action patterns that actually work out most of the time. Here's yet another example. ADX starts to break over 40 on this day. We got in here, let's see, 50 cents above 33.6. I would put us in at what, 34 and a dime. That's starting to pull back. So we have a hammer here. The support would be here. So I would get out if it loses, say, 31.80 support. So that's one that's starting to fade back. And you can see the average directional index is dropping as well. So anyway, the ADX is a real kind of a handy dandy momentum indicator. Usually works nicely. It just tells you, it's a good, what I use it for is a discipline tool. I also use the trend arms indices. I don't have time to go on that today, but I use things like the trend, the VIX, the tick, the broad market, if it's an out day or an in day. Anyway, here, ADX broke north of 40 on this day. So this, if I could circle this, this is your handy signal day, 50 cents above the high of this guy. Would have got you in at what, 27, 30, 40, 50, somewhere in this region. And we're off to the races, and ADX still goes up. Now, if ADX drops or starts to go down, it doesn't mean the price action will necessarily drop. It just means price action will consolidate and go sideways. Because again, this is a kind of a heat gauge, or the average directional index is a momentum indicator. So it goes up when an instrument either goes up sharply or down sharply. So that's a good professional walkthrough on average directional index. Now let's move on to our Bollinger Bands. And Bollinger Band, I don't know how many of you, I was talking with John at the expo at the VIP thing a couple weeks ago. He's a really nice guy and it's super intelligent. And for more, be sure to learn directly from John Bollinger. But I like using B-bands. As a former corporate statistician, I love the study of variability, kind of like putting a bell-shaped curve around price action. And it dramatically improves the understanding of variability. For example, a B-band squeeze on a breakout. One of the breakout patterns I like to look for is the classic Bollinger Band squeeze, where you've got a squeeze, kind of a narrow pattern here, followed by an expansion, kind of a contraction. Like take a deep breath in. Price runs up. Deep breath in. Inhale, exhale. The price action trigger that you want to start looking for is a breakout in momentum of candles starting to poke their heads above, going beyond the Bollinger Band. Now, oftentimes for scalping, you know, if I'm day trading with B-bands, if you have, say, a large lower shadow, that often leads to an upside reversal. But for swing trades, I like seeing large whole real body candles. That's the key #1 signal that you look for in context of a pre-existing uptrend, is a large whole real body candle pattern that pokes its head, kind of like, you know, sticking its head above the wall or something. It's poking its head above the Bollinger Band after a choke point, after a squeeze point. And that tells you, again, same strategy. I just use simple price action. 50 cents above the high of that signal day generates a buy order. And I use buy stop limit orders. By the way, only morons use market orders. It's easy to remember. Morons, market orders. Professionals, limit orders. Professional traders, we use limit orders 100% of the time, unless I'm in a whole bunch of day trades and the market starts to collapse and I may hit everything in market. But in general, I use buy stop limit orders for swing trades. So for example, if I were to set up an order up here, not a trading recommendation, but if I were to add to my winning DHI position, and I likely will, I use buy stop 52.50, limit 53. So it'll get me in if and only if this price carefully, gradually goes between 52.5 and 53. It will not get me in if it gaps to 56, and that's fine because I don't want to buy a huge gap up anyway. But if it does a little tiny minor gap or a nice steady uptrend, I'm all in. Well, not all in, but in on a continuation play in the trade. So buy stop 52.50, limit 53 would get me in during that 50-cent price window. Okay. Anyway, back to B-bands. Does everybody see this? What you look for is a narrowing, kind of like, I don't know, there's probably a good cartoon analogy or something. Kind of looks like, I don't know, an intestine or something. I don't know. Anyway, large, thick, that narrows to a choke point, that then you see large green candles above the upper Bollinger Band. And again, for those who are curious, I just use standard settings because that's what professionals use. So I do not tweak or adjust these. So it's a 9-step parameter with a 2 standard deviation. Okay. So it's a 9-step on the MA, a 9 moving average with a 2 standard deviation. And I use e-signal charts. This is the classic e-signal charts that I've been using for 15 years, since dinosaurs walked the earth, or so it feels. I mean, let's, you know, what you want to look for as a professional trader is, what do hot charts have in common that all the crappy charts don't? Okay. What are the charts that could potentially make you money as a trader that everything else doesn't have? Okay. So, for example, this is a squeeze point here on the B band. The breakout signal is generated maybe initially here, but firmly here when the large whole real body of the candle is above the Bollinger Band. You just add 50 cents to the high of the day, and that provides your entry trigger, and you're off to the races. Okay, so that's a very good, simple, easy to understand. That's one of the reasons so many traders like my teaching, is because it's simple and not complicated. I don't like using a lot of what one of my colleagues, Tony, would call chart spaghetti. I don't like having tons of technical squiggly line indicators, because squiggly lines do not a winning trader make. Correctly trading price action and volume is what a successful trading approach involves. So here, does everyone see? A good way to kind of mentally, and this is a good homework activity for all of you who are dedicated to learning how to do this stuff. And I do not have a Bollinger Band course I'm going to pitch or anything like that. I'm just teaching you guys, honest teaching how to do this, at least how I learned myself. Get a notepad, right? The notepad, my most often used and not coincidentally the simplest of all applications in Windows, Notepad, and open up a nice big notepad and cover up the answer key kind of thing to see how you would manage a trade. So here, not worth trading. Do we have a narrowing? Is it starting to narrow down? A little bit, which is good. Do we have an explosive price at new high breaking out, and it tags a new high above the B-band squeeze above the upper Bollinger Band? Yes, we do. So you kind of mark out this is resistance, and thou shalt not trade until at least 50 cents above the high on a price action trigger. And would that have worked out and made you money? Now, it took its sweet time, but eventually it does, right? Which highlights another important thing as a trader, is you do need to have some patience with these charts, right? Usually good breakouts are right from the start. Any questions so far? Let me know. A question from Joe: does the strategy also work in Forex? Yeah, but I use 30 as the, and thanks for asking, I use 30 as the signal for FX trades. Yeah, that's right, you guys are MTI, so. I mean, to answer the question, find out, right? Standard chart, properties, add your analytics, add an average directional index, decolor the white line, decolor the DI lines. I'm just doing it here on the fly for you so we can see. And for Forex, we want to see whether it does break north of 30. And so whichever pair you're following, look to see if ADX breaks north of 30. And often when it does, that leads to another subsequent breakout. The beauty of ADX is it's a lead indicator, and it's the only one I've found that does a good predictive role. So do you see right here where the ADX broke north of 30? That's I use 40 for equities and 30 for Forex. So here's the Euro Yen. It broke north of 30 here and subsequently ran up sharply after that. So always looking for currency correlations. What you're always looking for is signals that would get you in on a good breakout. So here, for example, is an ADX over 30. If you added, say, and I had 30 pips, by the way, 30 pips to the high of the day, that leads to a nice generous breakout. And you can see oftentimes using the 30 in uptrending charts makes sense, right? Breaks over 30. And again, same deal. You add 30 pips to the high of the day in which the signal's generated, and that gets you in on a rock star breakout like the US dollar to the Canadian dollar, eh? So we're all the way up to 129 in the dollar CAD and off to the races. But it starts to break above 30. That's the first sign that volatility is coming in. And as traders, we're kind of like Indiana Jones and the Temple of Doom, or Indiana Jones period, but instead of treasure hunters, we're volatility and money hunters. And so what you're looking for is lead indicators that you're likely to see a new breakout in progress. So thanks for asking, and I hope that helps. So I use 30 is the ADX signal line for Forex. Use 40 for equities. Let's take a look at what else is in play here. Looking for my Bollinger Band charts. Here we are. So back to equity. So yes, you can use this. The main thing that I found, I've worked with literally thousands of traders, both in my live Vegas, New York, Denver, California, Texas appearances. You're always looking for charts that have clean, wide trading ranges that are easier to trade. The doom of traders is that you guys trade too few instruments with too large lot or contract or share size. You don't spread yourself out there. What you need to do is take, and again, B-band squeeze breakouts work nicely, right? Here's a choke point, a move above the Bollinger Band, and we're off to the races. So pretty easy to follow, right? Those are the kind of patterns that you want to start looking for as a trader. The main thing, whether you're trading Forex or equities or whatever instrument category you're trading, is look for consistency of trends. What's the breakout strength of the pattern? Is it likely to continue to run up after you get in or not? Where's volatility, right? So there's many instruments you could be trading out there. Here's another good example, ITB. Does everybody see that pattern? Just a kind of a classic Bollinger Band squeeze. And the breakout strategy that I use to add to the body of knowledge is to add 50 cents above a candle height that's poking above a upper B-band line after the squeeze, after the choke point. And those are the type of patterns you want to start making kind of the bread and butter, the foundation of what you visually scan for. Now, I do not have any magic indicators or software to do the thinking for you. I would rather you learn how to trade with the best software, which is your brain, right? So learn how to differentiate between trades worth taking and those that don't. Always be a student of the best moving charts that could have, would have, should have made you a fortune had you traded it correctly, and stay away from iffy, choppy charts. For example, EKSO. This is a completely horrible, terrible chart unless you trade like a video game player. And if you're a video gamer, then more power to you. A lot of the young kids like these kind of charts. I'm 53 years old. I'll be 54 in January. How the heck did that happen? But anyway, the point is, could you have consistently made money with this chart? Look at it suspiciously. Well, probably not. Could you have consistently potentially made money with this chart? Yeah, I think so. All right. You could have thrown darts at that guy and likely come out smelling like a winner. Or DHI. Could you made money consistently trading this chart? You know, or do you try and trade the pop and drop penny stocks? Let's trade 10,000 shares and then take a $10,000 stop loss and lose your shirt to the market. Welcome to the pain of penny stock madness. Now, it's not to say all pennies and cheap stocks are bad, but you do need to be aware that they have much higher risk and reward associated with them. I mean, I get it. It went from $1 to $4, quadrupled in just a week and a half. So the profit potential is there, but odds are you and I, even me, you know, I like to buy above whole numbers. So, you know, could have bought 420, and next thing you know, it's down at 220 or 240, and you're in deep kimchi. So that's not good. So you want to trade charts that are more consistent, or at least if you do trade the cheaper pop and drop charts, make sure that they have high volume, which this one has, and high liquidity, right, and high volatility. Now this one actually would be worth a shot on a potential bounce, maybe above the Bollinger Band moving average over 320, but not a trading recommendation because that's a very risky chart overall. It's like going into a bad neighborhood, like most of the penny and the cheap stocks are. Not to hate on penny stocks. I mean, I personally know a guy who's done extremely well with pennies, but for the most part, at least I like to keep things more simple, kind of like hiring employees or meeting people in a personal life. You know, you want people in situations that are more consistent. And the other reason, this was kind of a bit of profound knowledge, was I started doing much better in my own real money trading account when and only when, after my first 6 years of hit and miss trading, I figured out the magic of position sizing, thanks to what I learned from my colleague Dr. Van Tharp and my institutional guys too. They always talk about where are you going to lighten up, where are you going to add in. I'm wondering, so what are you guys talking about? I thought, you know, I'd trade 500 shares or, you know, 8 contracts or 8 lots or whatever I'm in and let it go or not, and then kind of all or nothing in the trade. And instead, what I found, at least in my own real money trading, is it makes a lot more sense to initiate, you know, let's say you play the field. Let's say you play 5 or 6 of these guys, but you do lighter share size. And same thing for those of your currency traders. If you're looking at your Forex charts, you know, by all means, only trade in, at least I only trade Forex charts that are in strong uptrends, like the dollar CAD, right? And I use the 10-day, 15-minute chart on my FX training and FX charts. But anyway, I like bullish cup breakouts. I like 45-degree angle breakouts. I like instruments that are strong and likely to attract new buyers. Remember, the trick in breakout trading is not buying new highs. Any moron can do that and promptly get stopped out. Oh, I go long because it's taking a new high. Oops, I get stopped out. Then it runs without you. Welcome to the world of unsuccessful trading. You don't want to be that guy or that lady. What you want to do instead is, I'll tell you what you want to do. You want to trade at price points that are likely to attract institutional buyers. I got so many institutional clients. Those guys, mostly guys, and a few ladies of the house too, sharp, the women traders who make it to the prop shops and the professional trading communities are extremely sharp. They're very risk averse, which is how we should all be. The point is, you need to trade at price points, at inflection points that are likely to attract, like a magnet, a bunch of new order flow, not at a price point where the traders who traded pivots off of support are selling to you guys up here, right? So that's kind of an aha moment that took me quite a few years and thousands of dollars of stop loss to learn the hard way. So, you know, the pivot traders, that's our exit target, is up here. Sheer momentum price action will often lead to a handle of the cup that then promptly chops around and stops you out. And then, as if the trading gods had it in for you, it'll run up without you. So you're directionally correct. You did buy the breakout, but you got stopped out because you got in a little too early. So instead of that, stop the madness. There's got to be a better way. Be cautious when it comes to price action triggers and use a safety buffer, minimum 30 pips above a previous high for FX trades. And combine that with ADX and B bands for even better juice in the signal, right? So those are the kind of patterns you want to look for. Another favorite equity pattern. We got a few minutes left. Let me know if you have any questions. I'm here, you know, for you guys, and that's what I'm here for. I want to give you good, honest training without any big sales pitch and spend thousands of dollars and all that kind of stuff. I want to give you good, honest training, and the math makes up for itself. That's why I've got over, what's my number? Let me look it up here for you guys. Yeah, in my free trading week ahead Saturday events, which by the way you're invited to. I got over 4,600 people registered as of September. The number is currently up over 4,700 and continues to climb. So that's a good way to get to know me. Trademastery.com/free. 20 minutes every Saturday. Hit the ground running. We look at FX, equity markets, hot breakout charts, and the rest of it. Minimal sales pitching, high value, which is why I got almost 5,000 people, #1 in the whole freaking industry, registered for those. You know, here's another good pattern for you guys to look at. And this is good for Forex as well as whether you're trading E-minis or stocks or ETFs, whatever you're trading. This chart is NKTR, okay? And the pattern to look for is a sequence of 2 green candles with the second being larger than the first on an increase in volume. And you may have seen my article on stocks and commodities on this too. One of my favorite momentum candle breakout patterns, particularly if it's a Bollinger Band breakout like this is. It's a B band squeeze here and a breakout with a whole body candle above the upper Bollinger Band on an increasing volume with a pair of candles that are getting larger. So that's all systems go. That's kind of the early warning indicator that buyers are coming into that instrument. You know, as a professional trader, I'm always looking for new opportunities for how can I make the most freaking money as I can in my account. I'm in it to get paid. I don't care why it goes up. It's more buyers than sellers. It's as far as we need to know as professional traders. You don't need to screw around with, oh, let's look at 16 technical indicators and some magic BS to tell you how to trade. You just got to trade instruments that have continuous trends that are tight, clean charts that give you good, strong momentum buying signals using volume and volatility. And more power to you if you're using additional indicators like average directional index and Bollinger Bands to help fine-tune that, maybe for an entry signal that you get ahead of a classic breakout signal up here. That would have given you a trigger point to start looking for consideration for your entry. So, of course, we have a shooting star up here now, so I'd put a trailing stop right under 33.70 or so, right under support. All right, Richard's asking, I then use the Bollinger Bands to trigger the trade in the direction plus a buffer zone. Yeah, so what you're looking at, you know, again, for any chart that's headed up that looks good, this is the signal candle. And again, just being very practical, odds are you wouldn't have seen it on that day unless you just happen to be peeking at it. But odds are you inherit that. Maybe you're looking at it on this day or this day. Anything that's 50 cents or so. And again, the strategies I cover are custom designed for stocks and FX, but for stocks in the $20 to $50 share range. So do not use this with penny stocks. Don't use it with FANG stocks. You don't want to use these strategies. I mean, you could probably test them out and tweak it if you're trading Facebook and Apple and Netflix and Google, or trading penny stocks like XO, but I think your odds of being successful consistently are dramatically lower on the pop and drop, easily manipulated. Well, actually, this one isn't easily manipulated because of volume, but usually the cheap stocks are thinly traded, low float BS stocks that pop and drop, and it's kind of like a game of hot potato. Who can sell to someone else and get out before they get burned? And those are not the smart kind of charts to trade, whether it's Forex or stocks. You know, what you're looking for as a pro is stuff that you can scale into. And back to my initial point, after 6 or 7 years, one of the things that I found in my own real money trading back in the day is that you want to initiate every single trade as though it's just a pilot trade or a feeler trade or a test trade. You expect half your trades or more are going to not work out. The trick as a trader is, how do you make money if you're right only a third of the time? The only way is tight stops on the losers or break-even exits on the losers, and scale in or add to your winning trades, whether you're adding contracts or lots or shares or whatever instrument category you're trading. Does that make sense? I used to have a slide that I showed, but I'll just tell you visually, and I had a big P&L screen cap of only a third of the trades were in the money, 2/3 were losing trades, but I was still up, made a lot of money that day. I forgot the dollar figure, but it was hundreds of dollars up, being right only a third of the time. And the way is, you add to the winning traders, you feed the winners, starve the losers, scale into the ones that are actually taking out new highs, and trail a tight stop on, or use break-even stops wherever possible on the losers. You're casting a net. Beware of the educators out there that have magic indicators or proprietary stuff, because they will cherry pick charts to, you know, to support their particular thing. What you need is stuff that's consistent and reliable and valid across the field. I used to be a statistician at the Ford Motor Company, and I'm a nationally qualified, certified quality engineer. And I've got an engineering mind and a statistician. I'm a numbers guy. That's what I do. I'm a money guy and I'm a numbers guy. And I want an edge. I only want to trade when I've got an advantage. As should we all, right? So here's a squeeze. Here's a large green candle, and it's off to the races. You find these patterns over and over again in any decent trending chart. Here's the squeeze. The first sign it started to break out was here with the candle height here. So you got a squeeze here, right? It tightened up after big wide green lines here. They narrowed here during congestion, which we don't really care about. But when price started to go up and the upper height of the candle broke above the upper Bollinger Band, that's a buy signal, 50 cents above the high, and that gets you in on a breakout that runs. Let me ask a quick question, because we got just a few minutes left, and I will answer questions now. Where would you guys trail a stop? Because you should be looking, if you're in, at least I am, in Urban Outfitters. This guy has a shooting star today and a near almost a tweezer top. We got bearish upper shadows. That's not good. Where would you trail a stop? Let me ask. And by the way, the smarter, more professional, successful traders use really, really tight stops. You learn that. If you learn nothing else from me, it's cut your losers quickly or tighten in trailing stops to lock in a profit. So if I bought this at 26.5, 27, maybe added up at 30, 30.5, where would you trail a stop on an open long in this? The smart traders will give me a tight number. The bad traders will say, I don't know, 25. Okay, stop the madness. You got to be smarter, guys and ladies. You don't want to give money to the markets. Your goal is to take money from the markets. Profit seeking is what we are here for. We're trying to dig money out of these charts, not donate to the markets. Just ask your wife or your husband or whatever. If you conceal your trading losses from a spouse, you probably have a problem. It probably means you are over trading with too much leverage on any one position instead of doing what I call trade wide, not deep. Right? You need to trade multiple instruments and tighten in your stops. All right, the answer I would use, maximum drop dead stop would be 31. I'd be okay at 31.52, but somewhere up there is where I'd take profit if it starts to fade under 31.50 support, because we've got a bear cup, overall a bearish cup pattern. So if it loses 31.50, I'd be fine going to cash, right? I always think about it kind of like the gopher in the classic movie Caddyshack. For those of you who remember, if you remember Bill Murray and Chevy Chase in Caddyshack, and you're like that darn gopher, you take the money, you poke your head up, and at the first sign of trouble, you duck back down and go to cash, right? You look for ways to take the money. Kind of like Han Solo said in the classic Star Wars Episode 4, A New Hope, I expect to get paid. I'm not in it for the revolution. I'm not in it for your princess. And Luke says, if gold is all you want, then gold is what you get. And Han wisely nods his head and said, yes, I can imagine quite a lot. And that's what you want to do as a trader. You want to take money out of these charts. And if it starts to lose support, get out. You can always rebuy new highs. When in doubt, get out. Cash is, there's safety in numbers. So play the field. Play a lot of instruments. And do so wisely with charts that look like this. Big picture for longer.
The pre-report opt-in.
What's that? I've got a few minutes left, right?
Yep, you do. Sorry about that.
Oh, that's okay. Anyway, back to it. Let me, let's see, Rebecca was asking questions. Sorry, Becky, let me, if I can call you back. Let me take a look at the questions here. Thanks, I'll answer that. Richard's saying, for standard of 14, do I look for minimum ADX of 40? Yeah, for equities, 30 for equities. Trevor, is ADX over 40 means trend slowing down? Nope, not if you're trading the kind of charts I like to trade. I like when it breaks over 40. If it plunges down below 40, Ami's asking, Ken, what does it mean when the ADX breaks over 40 and then plunges down? It just means that volatility is slowing down. The trading strategy that I will use, therefore, is to tighten in a trailing stop. So where's that ADX chart when you need it? So if ADX breaks over 40 and we go along and it plunges, you just tighten in a trailing stop to say 50 cents or so below the low. It doesn't mean the price will go down. You can see there's divergence here. ADX is going down, but price keeps going up. What it means is that it'll drop during periods of consolidation. So what you do as a protective countermeasure is tighten in your trailing stop if ADX drops. You don't go to cash because it's not a directional indicator, but it does tell you things are getting quiet. So you do want to tighten in a trailing stop to either lock in a gain or play it as close to break even as you can. Hey, thanks, Richard. Let's see what else. Another question, buy 1 point above round number. Usually I use 50 cents or so. And yeah, Trevor, you could put the ADX on Bollinger Band chart, but the problem with putting too many indicators is that it gets cluttered and it compresses the visual pattern. So it's better to use a couple of different charts to stay on top of price action as it's moving sharply. ADX a 14-step parameter to answer Dinesh's question. Donna's asking, what do I find to find breakouts? I always get this question. I don't use any proprietary scanner. I use what's built into my charting software, and I use eSignal, which is just percent gainers, right? So I look at, and I'll pull up charts in the percent gain list and see if it's worthy of consideration for a trade. Okay, so like Kroger's doing a little gap fade here today, right? Anyway, so you'll often find, by the way, ADX will break over 40 in anticipation of a gap or in response to a gap. But anyway, I just use the percent gain and percent loss list. Mostly the percent gainers in the New York Stock Exchange and the NASDAQ. And that's all any professional trader uses is, you know, and again, at least this late in the day, at least 1 million shares volume and over 20, 30 bucks a share. So I don't see much going on in the NASDAQ. XNet had been quite a runner today for day traders. But anyway, just use keep it simple. Use the standard leaderboard scan, percent gain and loss list. Make sure that you're looking for charts that have some consistency because that's really important. I got a few minutes left here, a couple of minutes. Let me see if I can answer Rebecca's question, if I can find it. Maybe repost Rebecca. I don't see any question from Rebecca. Thanks for being here. What else do we have? Markets are high. What do you look for before a crash? Usually a multi-day reversal or a 2 or 3 day low. Okay, so oftentimes if I see 2 red candles in a row or a loss of 2 days of support, that'll get me to go to cash in a swing trade. Okay, does everybody see the validity and the intelligence of trading these kind of instruments that have more consistency? And again, you don't have to be trading 1,000 or 2,000 or 3,000 shares. I don't. I'll often start my swing trades with little baby feeler trades or pilot trades, as I call them, 20, 50 shares maximum. So it's not costing me much, and I can play the field. So, you know, I may be in several different instruments at once and make it work out. So, anyway, y'all have been great. I know the next speaker is coming up. Let me wrap up by just mentioning a couple of quick things. Trademastery.com/free is my free events. You can learn more about me at trademastery.com, around since 1999, since the dawn of time, it seems. And I wanted to thank the folks at, oh, thanks Renee for posting that. I was going to post that. You beat me to the punch. Anyway, it's here. Start with the click or free Saturday week ahead events. We got thousands of people registered for those. That's a good way to get to know me. I think you should test out any educator's free content before paying a nickel. Are you with me? Does that make sense? You should test out the validity and the success rate in your own trading of free content before you spend a nickel or any significant money with anyone, or start small. The other offer that I got for you, so that's the free offer, and that's what everyone should start with. The other thing is swingscans.com, and that's my best-selling alert service, and it's money back guarantee. It's only $7 for a 2-week trial. We meet every Saturday after the weekend events. Take a look at these members webinars, and you can download those high resolution WMV video, and you can see what the episodes look like. Every single Saturday we get together for weekly Saturday webinars, and these are for stocks in the $20, $30, $40 share range, like the ones I covered today. And you can, there's all kinds of videos and previews and all that kind of stuff, and you can, money back guarantee, it's only $7 for the trial, auto renews to $97 if you want to stay on, and if not, that's fine. It's still got hundreds of people, so that's something you might want to test out if you're a stock swing trader. And you can do a 2-week trial membership at swingscans.com. But the main thing is go to Trade Mastery and sign up for my free week ahead events. That's how I get to know you, right? Kind of like that TV series Cheers, where everybody knows your name. The 4,600 registered, they don't know each other's names, but I know everybody, or at least I'm familiar with everybody, and it's great to see big turnout. So I hope that this has been helpful with both ADX and Bollinger Bands, giving you a primer on not only the types of signals to use, but the type of charts to use them with. It can really help, help turn things around for you. The main thing is tight stops, lots of different instruments compared to what you're currently trading, and strongest possible signals with consistent uptrending charts. So anyway, thanks to Renee and the team at Investor Inspiration and MTI for having me. It's been a pleasure. Thanks so much to all of you for being here. It's great to see a big turnout, and I hope that that helps you make successful trades. Thanks, everybody. Appreciate it.
All right, and thank you, Ken. It's a pleasure having you back on and presenting to our group today.
Well, thanks a lot. Take care. And yes, Rebecca, it is 50 cents above the high of day in which the signal's generated. So thanks for reposting the question. Anyway, thanks, everybody, and best wishes. Take care, trade smart, trade with tight stops, and go get them. Go out there and keep it tight, keep it right, and do well in your trade. So thanks, everybody, and thanks to Investor Inspiration. This is Ken Calhoun signing off from TradeMastery.com. Take care, all.